If the roller coaster action in this stock market is making you sick to your stomach, maybe you need to stop fighting and start embracing it. We have an extraordinary level of volatility here. It feels like every day we're either soaring to the stratosphere or plummeting back to earth. And you know who benefits from that kind of volatility? The exchanges. That's who. Up, down. If you're running an exchange, you don't care about direction. You only care about volume. When traders flit in and out of an entire asset class on almost daily basis, these companies make fortunes. That's one reason why the exchanges are among the hottest groups in this market. Although this is one of those stealth bull markets that you don't hear as much about. Well, that's my fault. I don't talk about these companies nearly enough. Why? Well, I don't know. But they're not sexy as some other cohorts, like anything technology. Now, fortunately for me, you don't need to have sex appeal to make a fortune. That's exactly what these exchanges are doing. So why don't we take a look at things? Let's look at CME. The CME group, this is called the symbol is the elongation, the CBOE Global Markets, or CME Group, and the Intercontinental Exchange. These companies that practically have a license to print money, and their stocks are on fire. Why? In part, it's because the industry has become a slap-happy oligopoly. Thanks to a decade of consolidation, the major exchanges have tremendous pricing power because there's nobody left in the game who can compete on a large-scale basis. Boy, that's what you want if you're a capitalist. These companies have been gobbling up their rivals left and right for years. CME bought the Chicago Board of Trade. That was the CBOT. Intercontinental Exchange bought a series of companies, including the NYSE, or the New York Stock Exchange. Now they have the leverage to beat down potential competitors, which is why their stocks have been total juggernauts. So tonight we're going off the charts with the help of Bob Lang. He's the founder of ExplosiveOptions.net, as well as being the brilliant technician and the all-star duo behind TheStreet.com's trifecta stock newsletter. He's also the author of Know Your Options to get a better sense of where the exchanges might be headed, because these stocks remain as hot as can be. We know the fundamentals are good. CME, the company formerly known as Chicago Merc, is making a killing thanks to the strength in commodity trading, especially now that gold and silver have gotten their groove back. And you see we highlight gold all the time now. CBOE, originally the Chicago Board Options Exchange, has seen an explosion in earnings thanks to the introduction of weekly options. It used to be that you could only get monthly options. These are incredibly high-risk instruments, by the way, which is why speculators love them. Intercontinental Exchange owns the New York Stock Exchange, along with a host of other stock, commodity, and futures exchanges worldwide. We just spoke to Stacey Cunningham. Remember, we were outside in front of the New York Stock Exchange? She's president of the NYSE, and she told us a very compelling story, I thought. All three had strong quarters, even as they were up against some pretty tough comparisons. So now let's delve into the technicals to find out which ones are up to snuff in... Man, is that a strong chart. In the chartist world, let's start with the daily chart of CME Group, which made a new all-time high just earlier today. Not many stocks can say that. Even though CME got clobbered back in March, it's now up more than 15% for the year. Look at this rocket ship, will you? I mean, that's incredible. It's one of those things where you had, like 4 days. There's probably only been about 20 days that have been negative here. So what does Lang like about this picture? Okay, when the stock pulled back hard at the end of July, we see this was the big pullback here, okay? Testing its floor support from the June lows. It quickly rebounded from those levels. Buyers stepped in almost immediately because there's just such tremendous demand for the thing. Boom, bounces off of it right like that. Wow. While CME has rallied, the Ichimoku Cloud, all right, we'll try to throw everything at you here. That's a tool that uses a number of moving averages to give you a one-glance read on the situation. It has stayed green. That's very important. When the cloud is green and pointed higher, it suggests that the stock has more upside. And then there's what we call the MACD, or the moving average convergence divergence. That's one of my favorite indicators. It's an important gauge. It made a bullish crossover right there, you see, where the black line crosses above the red one. That's one of the most reliably positive signals in the entire chart book. Plus, we know that the big institutional money managers can't seem to get enough of CME. Why? Because we look at the Chaikin money flow. And that shows you that that's a measure of the level of buying or selling pressure. It's extremely strong here, okay? Stock's currently at $216 and change. Lang would not be surprised if this thing makes its way all the way up to $250. I wouldn't be surprised either. This is a very good stock for this environment. Next, take a look at the daily chart of Intercontinental Exchange. To Lang, this picture is a thing of beauty. Oh, my God, these charts are gorgeous. This is a gorgeous pattern of higher highs and higher lows. So that's what you want to know. Higher high, higher low, higher high, higher low, higher. You get the picture. It's really incredible. Once again, the Chaikin money flow, look at this. Look at all the money coming into this thing. Has been in extremely positive territory, indicating the big institutions are buying the stock hand over fist. The MACD indicator is right on the verge of a bullish crossover. It's not there yet, but it's on the verge. The Ichimoku cloud, in this Ichimoku cloud, I got to tell you, expanding, classic buy signal. Sorry. When Intercontinental Exchange pulled back to its 50-day moving average in late July, the stock found a powerful floor of support and quickly rebounded. Again, you see these things, boom. It made a new all-time high earlier this month and is now up 23% for the year. Lang's view, ICE is trading at $92 and change. He's betting this one's going to make a move over 100 very quickly. Finally, there's the chart of the CBOE. Once again, we see a very similar trajectory. CBOE, or the CBOE, got slammed in late July. They all did. They really took it on the chin, okay? But then the stock, just a couple bucks away from 52 guy, just roared right back. Lang likes that the CBOE has made a consistent pattern of higher highs and higher lows. There it is again. You see that? This is like the diciest moment, but it bounced right off the 50-day, which is very powerful. This is exactly what Chars is always looking for. Since the latest rally really took off in April, the stock has climbed on strong volume and heavy money flow. There again, we look. What do we have to look at money flow? We have the checking money flow. The MACD is extremely positive. There you go. As is the relative strength of the RSI. I've got everything thrown at you here. That's another crucial momentum indicator. The Ichimoku cloud, trending higher. What is not to like? Best of all, in May, CBOE made what's known as the Golden Cross, where the short-term 50-day moving average crosses above the 200-day. That is the holy grail for chart watchers. Any money manager who cares about the technicals will plow into a stock that does this, okay? Which explains why the CBOE is up roughly 20% since then. Lang believes the stock has more upside. Yes. But with CBOE currently trading at 120 after a big run, he'd like to see a slight pullback to 115 to 118. You see that it's just a little too much above the average to pull the trigger. Here is the bottom line, people. The chart is interpreted by Bob Lang, suggests the exchange stocks have a lot more room to run. He likes CME and Intercontinental Exchange right here. Buy them tomorrow. And he likes the CBOE into weakness. As for me, I love these stocks. And I'm getting a sense that these stocks have been anointed as winners by the big hedge fund and mutual funds, which means they could potentially keep running right through the end of the year. Guys who want to own call options deep in the money for the month of December, I'm sanctioning it. Although ideally, of course, I want to pull back. All three work great for me. Mad Money is back after the break.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.